G'day traders, Mindset Reset. Today we're talking about 9:30 New York time. And 9:30 is when the equity markets in New York open. And as I mentioned earlier in today's post, if you're not experienced, if you're not consistent, if you're struggling, you're getting some results and getting chopped up again, to wait for the New York 9:30 open. And regardless if it's currencies, oil, indexes open at 9:30. Which brings up another interesting point. We'll talk about a couple things today. The closing price of a day, the day count, Monday, Tuesday, Wednesday, Thursday, Friday. So I'm getting a lot of questions from traders. I don't know if they have the playbook. I think they're getting other misinformation in other places. Monday is day one. Monday is the opening range. Friday is the closing range. So if you understand what that means and you understand where the weekly highs and lows are, Friday closes the range out for the week. Monday starts the new week. Now we can have a daily level broken on a Monday, which can give us a thesis in the US session. So if you're trading Asia, if you're trading London, depending on the instruments that you're trading, and say you're trading Asia and you're trading a US index, you may or may not get movement. It may not be the best instrument to be trading. You may want to be more focused on an Asian index in the Asian session. Why is that? Because they're more than probable over Monday, Tuesday, Wednesday, Thursday, Friday to have a parabolic move in that session, day two, or maybe day two on the backside, whatever that is, as opposed to a US index, which may possibly give you a trade. But most likely in the US session, we're going to have the larger opportunities when we have a 3-session Asia, London, New York setup for maybe high of day, low of week, low of day, high of week, or high of day, low of day opportunity, whatever that may be. As the day evolves, Asia, London, set up a box. Peak formation high, peak formation low. We can get an Asian session that's inside of the US peak formations. So one of the highs and lows of the day are made by peak formations in a session. So again, a lot of misinformation about peak formations. Peak formations form the high and low of the day. Now, there may be lower peak formation highs if a market's closed down. And there may be higher peak formation lows if a market's closed up. Maybe London's made a higher low, peak formation low, and the US has put in a peak formation high. There's our box heading into the new day. 3 levels of rise, whatever that may be, 50, 50, and 50, or 25, 25, and 25. But the most important thing to understand is that the high and the low of the day give us a reference point heading into our session if a market has already broken it, or if they've traded down into a peak formation low or high, or up into a peak formation high, for a 3-session coiled market explosive move. That is all I'm looking for. The same process applies over 3 days. Peak formation lows, peak formation highs, consolidation up high or consolidation down low for a parabolic reversal, whether it's on Wednesday or a Tuesday, Wednesday, Thursday, Wednesday, Thursday, Friday, because the weekly templates will be different based on sometimes the calendar. So we have Fed tomorrow, and the Fed typically, and non-farm payrolls, will usually affect the templates. We'll see 4-day setups often on a non-farm payrolls week. We'll have an inside day, and then a parabolic move or some kind of parabolic opportunity, typically on payrolls, on an instrument. So I want to talk about closing price. I'm getting a lot of questions about closing price. Paul Tudor Jones about closing price. I want you to think about it this way. If you're trading New York and you have yesterday's closing price, for example, Monday index is closed as up days, closing price, Tuesday's a failed breakout. By the time New York, we get into the US window, not 9:30 yet, but we get into the US window, the market's making lower lows and continues to go lower in that first 30 minutes of the US session, not the New York Open, the US 12 candle window. Then it starts to go up 3 levels of rise, and at the New York Open at 9:30 pins through the lower peak formation highs of the London session. We're well below the closing price at the open of the New York market from Monday's session. What does that tell you? If somebody bought the close on an up day at the close of New York on Monday, they are largely underwater or margined out at this point, as the market's already fallen 100 plus pips. But they had a failed breakout. We've opened up inside of the high and the low of the day. We've taken out the lower peak formation high in the first 15 minutes with an engulfment pin candle on a 15-minute chart, where is the money? We'd already taken out the low of the week on the DJ30. We're inside on the NASDAQ, but they pumped up into the lower peak formation highs of London. If traders are getting in early, think about it this way. They take it down low and traders are buying the low of the day before the New York equity markets have opened. Where are they going to go? They're going after the money. They're going after the money. So draw your levels of where that closing price is and understand if you're long or if you're short, who's in the money. And what type of setup is it? Do we have 3 levels of rise for the dump, or do we have 3 levels of drop consolidation for the pump? Gold, first hour, explodes and reverses down through the low of the month. Peak formation low. Goes up and makes a higher high on the inside. First hour makes a little high, they go higher and pull back. New York opens and drives down into that peak formation low. Dump and pump. So a lot of the misinformation, traders are getting all this stuff about, pushes and everything else. That's great, except that you still have to have a thesis and understand that timing. New York equity market opens. We could have a currency that's been trending and breaks out and dumps down before a session begins. Dumps down before a session begins. What happens at 9:30? It drives into a peak formation low. They make a low in that first hour. They drive back into it, either a shortened W or a lengthened W. Right? If you're going long, dump and pump. Back where are they going to go when New York opens? Back to where the money is. If it's a dump and pump setup, if they pump it up and pump it, and New York opens up on a pump, where are they going? Back down into breakout, traders. 3 pushes up, 3 levels of rise outside of the high of the day. I say this over and over again. 7:59. Draw your high and your low from the sessions, because that's the end of the London session and the U.S. window is about to start. But remember, at 9:30, what's going to happen? So think about this. I keep saying, don't just wait, because traders are getting chopped up. And then they're beat up by the time the equity market opens. So New York's opening at 9:30. Closing price, you'll often find that the closing price, they will lock in the high or the low around that closing price and then make a higher high and dump it down into that closing price before pumping up, or vice versa. Pump it up for the dump down off the closing price. They've already maybe broken the low of the day, they trigger new shorts, they pull it back, but we now have a new anchor point for the pump and dump into that US window when the equity market's open. So 9:30 is a critical time in the US window. If you're trading London, that middle hour, 3 a.m. to 4 a.m. New York, same thing. Now, can we get moves in that first hour? Absolutely. If you get a parabolic move that comes down after they've spent 3 hours in consolidation in the Asian session, higher high, high and dump, a little higher high before the session begins for a dump and pump right at the open, take it. Okay, that's a 3-hour consolidation at the low of the day. 3-hour consolidation at the high of the day. Lower low, pump it into the high of the day, roll it over and dump it right into the first hour. Not as common, but it can happen. Okay, but when we're in the US window, 9:30, you can almost guarantee that when New York opens, they're going to go back and get the money, whether it's a reversal or a continuation date. Day 1, day 2, day 3. It's Monday, Tuesday, Wednesday. Wednesday is a reset, day 1 again, day 1, day 2, day 3, into the closing range. So for people who say, oh, the day count's too confusing, it's Monday, Tuesday, Wednesday. Wednesday, Thursday, Friday. Day 1, day 2, day 3. Day 1, day 2, day 3. Now within that, you can get 3-day setups. So if we get a failed breakout on a Tuesday, that can begin a day count, Tuesday, Wednesday, Thursday, for a parabolic move. We can get an inside day on a Wednesday, parabolic move on a Thursday for a huge move. But the closing range is on Friday. Why? Because that's what closes out the week, and that gives us our reference points heading into our new week when we get Monday's opening range. The reason why it's so important to understand timing is that if you go back and put 9:30 on your charts, okay? Well, okay, if you're trading London, put on 3 a.m. Understand where your high and your low of the day are. If no levels have been broken and you're inside, they're going back to one of the extremes. So if you get in early, don't be surprised if they come back. you might still be able to have the right thesis, but it's not ready to explode until the market opens and retests the extreme, whether it's inside of the extreme or through the extreme. And as we saw in the indexes today, we saw low-hanging fruit where they continued to push lower on S&P and DJ30. NASDAQ pushed lower, but still inside of Monday, Tuesday's high-low. Monday, Tuesday, high-low, opening range, initial balance, peak formation high, peak formation low. If Friday's closing range is one of those peak formation extremes, now we've got a 3-day box. We can get a parabolic move sometimes on a Tuesday, day 2 trend trade. So a question from a trader today was, why didn't the Aussie dollar go? Well, first of all, just because it broke a daily level, you have to understand that that's now part of our initial bounce. Peak formation high, peak formation low. And in the US window, they went 20 pips on the New York Open, back through the high of the session. 20 pips on the Aussie dollar is about as good as you're going to get, typically, on that pair, unless it has moved 3 levels. It's only sitting in a 40 pip box. 40, maybe, I think it's maybe 50 now with Tuesday's high. So, but Friday closed as an out of balance down day. You're still inside of Friday's range. Go back and look at the US session. Late in the session, it formed a lower peak formation high. That is the high. Tuesday's inside of that. Closing range, opening range. There's our box. Heading into day 3, which is a Fed day. This is one of those weeks when we get the Fed. You're going to probably get a different variation of one of those templates, and understand what the Fed can give you. The Fed can give you an explosive maybe move as a pump or a dump day for maybe a reversal on Thursday, or a day 1, day 2, day 3 for a parabolic opportunity on Friday. But the timings of everything is critical, and the high and the low of the day, which is why I've just basically said before, if you don't have the experience or the track record or the consistency, paper trade the major red news. If there's a longer time frame setup, first bounce, first bar, a template, 3 levels of rise, 3 levels of fall for a trap volume trade, wicks, second hour trade, again comes back to New York. It's so important, and I emphasize this because traders are coming in asking me questions, and I have not, this is day 2, this is a, whatever, and it's like, okay, Monday's day 1, Tuesday's day 2, Wednesday's day 3. And I can assure you, and I'm telling you with confidence, I'm talking about where you're going to get opportunities to put size on. Other time frame traders are driving these moves. These aren't little zigzags for, catching pips. I'm talking about where are you going to size in. Think about that. Do you want to size in when there's going to be a move from one side to the other? They're going to go back and get the money. There's a reason why it's not coming back. They're going to go and get the money. Now, it might come back later, but I'm talking about in the window, in my trading time. New York opens, they might push for 15 minutes in a false move, consolidate for 15, and the next hour opens, and boom, it's coiled to explode. 50, 75, 100 pips, done. As some traders, saw this morning, 4 minutes, and 75 pips or something. So, timings, levels. I said today, and I'm going to reinforce this, stick to 930 and the high and the low of the day. Now, just because it's up high doesn't mean it can't be a low-hanging fruit continuation trade. So this is why traders are like sending me screenshots and stuff going, oh, it's gone 3 levels of rise and it's broke out. So what? It could be a trend continuation. Everybody's looking to counter trend all the time. Day 1, day 2, day 3. Maybe that's, if depending on the instrument, the next session may be where the reversal is. They might hold it up there in the US window and dump it in the Asian session. But you still need to have a setup. It's so important to understand that. If you stick to the timing window, think about it this way. If you stick to the timing window and focus on that time, if you're trading London, focus on that middle hour. If you're trading Asia, focus on the middle hour. It's reproducible, okay? High and low of the day, reproducible. Timing, reproducible. 3 levels of rise, pump and dump. 3 levels of drop, dump and pump. Now, an interesting question. Oil went down today into the open of the US window. It broke out of yesterday's low of day. We're inside of a larger high and low from the previous week. One trader said, I thought it was a dump and pump. But it pumped up 3 levels into the breakout low of day. right at the open of the New York session. For the dump, straight down through the low of the day. 100 pip move, straight down through the low of the day. So remember, those daily levels are significant to become potential resistance because we now have breakout. They've gone back and retested the breakout, which is what we expect, and it's at the timing window. So if you're trading in that first hour, okay, I took a trade this morning on TJ30 long, dumps down, consolidates, second hour, goes parabolic into the high, right into the open of the window. I'm out at the high of the London, lower peak formation highs of the London session. 15 minutes, they're working the high, 3 pins, 1 minute, 5 minute, boom, we're in. It dumps straight back down. My first thesis is they're coming back to get the second hour longs, of course. And then we collapse through the low of the day. We'd already taken out the low of the week. We got low-hanging fruit down there. We got the first mouse going long. They go right back down and drive through. They get people looking to buy the low, cherry pick the low. The longer time frame, the other time frame traders though, guess what? They're short from the high of the day. They've already locked in a failed breakout, and if you go and look at the overall template, we got a creeping trend down, lower highs, lower lows. Okay, they took out the high of the day, failed breakout. Now we got longs trapped at the high of the week in a new week, Monday, Tuesday. Think about that. We got longs trapped. Where's the money? They're going back down to get the traders who have gone long in that first hour of the US session. So the reason why I'm hammering this home is that I keep repeating this, 9:30, 9:30, 9:30, and I got traders messaging me saying they got chopped up, and that bugs me. And I'm getting other misinformation. It's like I keep saying this over. I will repeat it over and over again. Monday's day 1. Tuesday's day 2. Wednesday is the midpoint of the week. Okay, the mid-range of the week. Think about it. It's a 5-day template. What's the middle of the template? And it could be a continuation. It does not have to be a reversal. It can be a day 1, day 2, day 3 continuation. Right? Which is why we'll get, we got 4 days of breakouts in the market. People are trying to counter trend it, and it's going on a measured move. You have to step back and look at it and be thinking like a professional trader. And remember, I'm not trying to get a direction, right? I want to know, is this setting up so I can hammer into it? Is it a pump and a dump? Okay? Or a dump and a pump? No matter what setup you think you have, it needs to pump and dump or dump and pump. Even if it's a continuation trade, a low-hanging fruit, currency, 25 pips minimum will typically be a minimum. Very rarely will it be less than that. And the way to tell is time. If you get a first hour and it's gone 19 pips instead of 25, and 9:30 opens and gives you an entry, and it's coiled inside the EMA, I'm hitting it. Because if they're going after the money, it's going to go 50, 75. It could be an all-in day where they're not coming back, and it's such a weak market, they can't even move it more than 19 pips. So you have to be thinking. It's not about all this other gibberish about getting a direction right. I'm looking, where's the trade? Where is the trade set up? That's it. So I'm going to emphasize this because I don't know how else to tell it. I said, it's 9:30 and the high and the low of the day. Work from there. Pump and dump and pump. Lower peak formations, higher peak formation lows. They are not little swings. It is a session. The session puts in a peak formation. If it's inside, there is no peak formation. It's just continuation. There's no peak formation. But if it's moving and it's broken a level, you will have a peak formation high and a peak formation low. If it continues to move through a low or through a high, that means it's not in place yet, which means timings, levels, behavior, price. It could go another 25. It might keep going another 25 and make you chase a move, consolidate, third hour opens and they dump down 50 pips right through the higher level longs or the lower level shorts. There's easy money laying on the floor. Easy money. Stop trying to catch moves and get into these zigzags. Levels, timings, behavior of price. 9:30, trade New York open. Doesn't mean at 9:30 get in the market. It means at 9:30 the market's open. Okay? 9:30 the market opens in New York. So if you get in before that and you wonder why you're getting chopped up or getting stopped out, or you're like somebody today traded gold, they're up 50 pips, they got stopped out. They couldn't figure out why they got stopped out. I said, first question was, why didn't you take the 50 pips? Why is it supposed to go more? Why is it supposed to go more? It's Tuesday. It's Tuesday, day 2, right? What day do I look for big parabolics? Okay, it went through the high of the day. Took out the high of the day. Where's the major point that it can turn? after it breaks a daily level. High of the day, 50 pips. Lock in the money, get off the screen. That's easy money. You got nothing. Bill McLaren, I hear this over and over in my head. I keep saying this in my videos. Learn to take a profit. He said that to me over and over and over again. How am I doing? You hung up. Learn to take a profit. How am I doing on my trades, Bill? Learn to take a profit. Okay? Learn to take a profit. That's my rant for today, traders. Just a little stormy here, but I really want to hammer this because I'm not sure how, people want me to do more videos, and I'm putting the screenshots on there, and I've been over this, and I'm going to do more videos, but I really need to clarify some things because I'm getting some other stuff put to me, and I'm kind of like, whoa, I didn't say that. That's not what I'm teaching, and that's not what I'm doing. I'm doing what I'm doing, and it's scalable. It's scalable in size. Trust me. So if you want to scale stuff up or you want to guess moves and be at the screen all the time, you're at the wrong place. I'm talking about going there, hitting trades, and when I have sizable 5-star opportunities, loading the boat, sizing in, and holding and locking in money. And those are driven by other time frame traders. Lock in the money, get off the screen, don't do anything in between trying to catch pips. Okay? 1% better every single day. Thank you, and I appreciate your patience. Appreciate your listening time. I hope that sinks in. 9:30. Tomorrow's a Fed day. Somebody asked me about 8:30 major red news on building permits. I do not have that as major red news, and it's irrelevant because New York opens at 9:30. Have a great day, traders. Let's go.